Hi dear friends, today is Wednesday, December 4. Let's look at the charts for the euro and the pound sterling and try to make forecasts. We see that the euro managed to recover yesterday despite a relatively light macroeconomic calendar. Initially, the greenback gained momentum boosted by strong US job openings data, but soon gave back its gains. While the EUR-USD pair remained range-bound, it's too early to declare a resumed bullish trend. Nevertheless, the current pause presents an opportunity for potential upside, with the euro likely to reach last week's high. As for the British pound, heightened market volatility allowed buyers to push the price higher. However, the pound-dollar pair is likely to extend gains, supported by today's economic data. Wednesday's macroeconomic calendar is packed with important news releases. And the first half of the day, market attention will be on the services and composite PMIs for the euro area and its member states. Services activity is contracting in most EU countries, with composite indicators remaining below the 50-point threshold, largely due to weak manufacturing performance. If the figures in several countries fall short of analysts' forecasts, the Eurozone services and composite PMIs are likely to stay below the 50 mark, exerting downward pressure on the euro. However, if data beats forecasts, the euro could see a strong bullish move. Britain is set to release similar statistics. The UK services PMI is expected to come in at 50, while the composite index is anticipated at 49.9. Disappointing figures are likely to weigh on the pound sterling. Later in the day, market participants will shift their focus in speeches by ECB officials and Fed Chairman President Jerome Powell, as well as the ADP National Employment Report. Private payrolls are projected to have increased by 152,000 jobs in November, down from 233,000 in October. Weaker than expected data could prompt the Fed to cut interest rates at its December meeting. Amid such growing expectations, the greenback could come under heavy pressure, giving the euro and pound a chance to extend their gains. The ISM services and composite PMIs will also be closely watched by traders. Activity in the US services sector is quite satisfactory, with data expected to be positive. This report could provide support for the dollar and even lead to a trend shift. Now let's move on to technical analysis. According to the 1-hour EUR-USD chart, a decline followed by a false breakout at 0.492 will generate a strong buy signal. In this case, the euro will rise to 1.0533, where bears will likely regain control of the market. If the price breaks through and consolidates above this level, the volume of long positions will increase, with the European currency extending gains to 1.0558 and possibly 0.584. At this mark, I recommend going short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 0.533 and 0.558 can be considered on the false breakout. The target of bears will be 1.0492. If the price breaks through this level and tests it from below, the euro will dip to 1.0464 and even 0.430. At this level, it would be wise to go long on a rebound in anticipation of a 25-30 move. Going long at 1.0464 and 0.492 will only be relevant in the event of a false breakout. Speaking of the British currency, a false breakout at 1.2693 will generate a sell signal, with sterling diving to 1.2653. If the price breaks through and fixes below this level, sterling will extend its weakness to 1.2618 and probably 25.91. At this mark, traders are advised to go long on a rebound, expecting a 25-30 pip move. Long positions at 26.53 and 26.18 can only be opened on a false breakout. In case of muted selling volatility, if the price breaks above 26.93, the British pound is likely to climb to 1.2718 and even 27.42. At this level, I recommend going short on the rebound, counting on an intraday correction of 20-25 pips. Going short at 1.2718 and 1.2693 will be appropriate after a false breakout. Good luck to all.